A very good morning and welcome to Almus Market Mornings. We discuss the latest narratives that drive the financial markets. The headline GDP number from the US, which is quarter on quarter number, was much lower than forecast. But attention now will be on two things that will drive markets today. The Bank of Japan rate decision. Now, yen is trading at its weakest level since 1990, so participants are keen to know whether the Bank of Japan will intervene. The PCE numbers. Now, this is the Federal Reserve's preferred inflation gauge. Morning, JK. What does the details say about the US GDP? And of course, please do break down today's events for our listeners.
Yes, good morning, Swaraj. Yes, I think for the first time after several months, we have had a lower growth number from US at 1.6%. GDP was the lowest in the last 2 years, the quarter-on-quarter number. Although it still looks good if you compare it with other major economies. So that was the first disappointment. And but if the market thought that it was going to be, portending earlier rate cut from US, they were disappointed because the accompanying PCE deflator, which goes into the calculation of GDP, came much higher. The core PCE deflator was at 3.7% year on year versus 3.4% forecast. And, inflation pressure was all about sticky service prices, which soared to 5.4%, and that's the highest in about a year. So, yes, the market, all the market reaction reversed immediately from dovish to hawkish expectations. We had the jobless claims number also, which came higher at 207,000 versus 215,000. That was expected. So we have a series of mixed numbers from US. But if you look at the European side, we have a steadier and more stable, data. And as we mentioned yesterday, the E4 number was very impressive. And yesterday we also had consumer GFK consumer confidence number from Germany. That was also quite impressive. It increased, of course, still in the negative territory, but increased to the highest level in 2 years at minus 24.2. And looking at the details, German consumers have become more optimistic regarding their income expectations, willing to spend more and save increased amount. So indicating that despite more optimism, more dovishness, I think optimism rules in German economy, and that's good for the euro. So as far as the market expectations are, rather the market reactions are concerned, we had a big range in the treasuries. 10-year moved between 4.61 and 4.73. Ended at almost the highs. 2-year moved about between 489 and 5.02, broke 5% and stayed there for quite a while. Only a sharp sell-off in equities with some risk-off sentiment brought back some buyers above 5% yield. Now, following the US data, US rate futures market is now pricing only 56.7% chance of a cut in September also, and that is down from 70% late on Wednesday. Yes, for your point about what's ahead today, the PCE number, which the Fed tracks now, what was expected was a slightly lower number in PCE core inflation from 2.8 to 2.6, but the deflator number accompanying the GDP now puts a probability that even that can be higher. And so market will be prepared for a worse number as far as the PCE is concerned. And there are some slowly increasing number of people calling for no rate cut this year as well, as far as the Fed is concerned. At the same time, some people are starting to think whether US will get into some stagflationary situation. Bit too early, of course, because growth is slowing, but the inflation is higher. So that is something that we will observe in the days ahead. Yes, Japan is also in the focus. Japan, in fact, announced the inflation number for Tokyo region today, and that came quite low. So that puts cold water on any expectation of another policy move, at least on the rate side. The Tokyo core PCI came at 1.6% versus 2.4% last month, and the expectation was at 2.2%. But BOJ rate decision is expected. While they may not test the rates, there are still some people hoping for reduction in the QE amount, a signal that their policy easing might be slowing down, and that can actually be a support for yen. And if it is accompanied with intervention, it can have a good impact also. So that is what we are what we look forward to today. Yes, stocks, there was a big sell-off in US, kind of expected after Meta had declared poor quarterly report after the closing bell on Wednesday. Dow at one point had fallen more than 700 points. Nasdaq had fallen more than 350 points, but both of them recovered strongly to end on it only with 375 down and 100 down, respectively. The GDP numbers also put some, negativism on the stock market, because equities have been hanging on high growth also at these rich valuations. And if you don't have high growth, that may translate into lower than expected earnings. So there is some challenge for maintaining the equity prices at current levels. On the currencies, euro had a minor dip, but seems quite well supported, more due to the positive news emerging from Europe than on any negatives from US. Of course, the focus is on yen yet, which is, as you said, at a 34-year high at 155.70. Important to see what Japan does today or in the days ahead, because their verbal intervention has actually stopped for some days now, which means there may be some closer to some action. Actions speak louder than words. So there is something we'll wait and see. On the rupee, it remained a mute spectator to various things happening in the global markets, confined to a very narrow range. Sort of complacency, in the market that, rupee will not be allowed to be volatile, because ever vigilant central bank is ensuring that it is staying in a range. But then we have a potential for big moves in the global markets because of the dollar yen possibility intervention, and then also the US rate scenario, which is very dynamic and shifting from rate cuts to possibly hold for the full year, etc. So these things are eventually going to impact the rupee, and particularly the yuan, which is so far not reacted much, but if it continues to weaken, we might see that as well. So rupee steady for now, but maybe more volatility in the later days. Thank you.
Thank you, JK. And the data from the US, the growth numbers were worse off when it comes to forecast, but still looks good when compared to the other economies. On the European side, however, we are seeing some stable numbers showing some signs of economic recovery. Even the consumer confidence number from Germany improved. So basically a good economic recovery and improved sentiments. That's the theme going on the European side. We had yields rising sharply. US 2-year broke the 5% mark, and US rate cut expectations in September has dropped to 57% from more than 70% earlier. And markets are now preparing for a worse number when it comes to the US PCE, as hints of inflationary pressures provided by the GDP numbers yesterday continue to persist. When it comes to Japan, Tokyo inflation came on the lower side, 1.6% versus 2.54% last month. Maybe this will lead BOJ to keep rates unchanged. Nothing home to write about rupee. The movement remains quite muted. People are closely tracking the Chinese yuan, which is, of course, the movement will also depend on how the yen moves. That's it from us today. Have a very good weekend. Tune in on Monday for the latest in the financial markets. Thanks for listening.